folks, isn't the stock market just absolutely fascinating? Oh man, just when folks think they got it down, you go ahead and flips on them. So CPI comes in a little worse than expected, slightly worse, like 0.1 percentage point worse, okay? Market tanks down at first. Everybody's like, oh my gosh, the CPI came in 0.1 percentage point worse than expected. Get ready, market's gonna tank. Futures down huge. Indexes down huge. And what happens for the rest of the trading day is the indexes absolutely boom. And we're talking about 1,300 plus point swing for the Dow Jones Industrial Average here today. If you want to go ahead and take a peek at the NASDAQ from where it opened today to where the NASDAQ closed, it made almost a 5.5% move for the NASDAQ here today. Absolutely epic, massive move. Now it was interesting. So I said, okay, let me turn on CNBC today. Let's see what the Wall Streeters are saying. Okay, first off, the Wall Streeters are very confused based upon their comments and kind of watching. Obviously, CNBC just has all these Wall Streeters on, very confused about the move here today and what happened here and things like that. Right. Also in much of disbelief. And a lot of them just wrote this off as basically just a one-day rally. We're going to be down from here. So overall, did today change anyone on Wall Street's perspective on the market? Absolutely not. Today did not change any. If you were already bearish and you didn't believe in the market, right, and you're not a buyer on Wall Street, today changed nothing for you. Those folks are still very entrenched in the camp of bearishness, of being underweight equities, and maybe being heavy put options, short selling, things like that, right? Or just potentially cash in general. They really still want no piece of this market based upon the countless folks that I just saw on CNBC and all those Wall Streeters that went on there. They were either in confusion or basically just writing this off as this is just like some freak kind of thing happening here, okay? Now, here's the thing. In all these Wall Streeters, they act like they can't figure out like how we rallied today. Like what happened? Like I don't get it. Okay, and think about this for a moment, right? The S&P 500 was down over 12% just from the last time CPI was reported a month ago. That's an extraordinary move in a very short amount of time. The S&P 500 lost about almost $5 trillion of market capitalization just since the last CPI number came out. Think about that for a moment. Nearly $5 trillion just in S&P 500, right? And so you're looking at a situation, we had this insane sell-off into this, right? It's just called an epic sell-off of people going pretty much max bearishness. If you look at what was AAI investor sentiment at a week or two ago, 60% plus of investors bearish on the market. Those are some of the highest numbers you've ever seen in the history of the AAI investor sentiment, which dates back all the way to the 1980s. Think about that for a moment, right? And so we had this insane level of bearishness going into this. We had this ridiculous sell-off, trillions upon trillions of dollars of market capitalization just completely wiped out, right? And so if CPI just didn't come in as a disaster, what would we position to do? Were we really positioned to go down? No, that was just a fake out situation there. That little initial down huge move, that was just a fake out. And you see that on the upside sometimes too, where market will fake out like it's going up, and then as soon as the trading day opens, things just start going down and down and down, right? It was a complete fake out essentially in that situation, and these folks act like they never saw it coming. And it's like, for Wall Street, these folks are so in the short-term stuff that it amazes me that they couldn't see a situation like this playing out today where the Dow bounces back over 1,300 points. Because these folks, they really just focus on the short-term all the time, right? They're always in and out of stocks doing all this stuff. Oh, I'm selling this, buying this, selling this, going short, buying put options, buying call options, doing this, right? Writing call options, writing put options. They're doing all these short-term activities, and yet they couldn't see the writing on the wall here on what was about to happen here if CPI just didn't come in as a massive miss. And that to me is very, very intriguing. Look at this. Since mid-August, the NASDAQ dropped over 20% going into the CPI number, okay? Over 20%. That's extraordinary. That's a massive, epic, insane move, to be quite frank. In a matter of less than 2 months, look back at history and tell me how many times the NASDAQ ever fell. 20% plus in less than 2 months, okay? Maybe one time or two times ever in the NASDAQ's history did that baby fall over 20% in less than 2 months, okay? It never happens, but it happened. And so we went into this situation obviously massively bearish, right? And that's why I did the video yesterday called The Stock Market is Set for an Epic Rally, and I went through all the different points that I had around why we're setting up the market for an absolutely kind of epic rally and, kind of into year end essentially. And I went through all the different points. I went through all the various things, right? But unfortunately, something like that just doesn't get through to folks because that's not the content people really want to see right now, right? What people really want to see right now is not that sort of content. They really want to see the economic devastation type stuff, right? The fear-monger type stuff, economic depression. That's what's getting the real views right now out there, right? This is what people want to see. That's where the views are at. And so media is obviously picked up on this, and so that's what they're covering right now, and that's what people are eating that stuff up, right? So if you try to lay out a very well-formulated thesis on, of why the market's setting up for potentially an epic rally, right? It's only going to get through to a certain amount of folks, right? And most folks just aren't going to be into that sort of stuff in this sort of market. They're just not, right? It's only about kind of the economic devastation stuff, and that's unfortunate, right? And so I appreciate the folks that watch my channel, and I don't have to fearmonger you all the time to get you to be interested in a video. But unfortunately, if you want to get through to the masses and you want to really push big time viewership and things like that, you got to go for that side because that's what people are eating up right now. And it's very unfortunate, but it is the market we're in at this given moment, right? Now, if we look at big tech, I saw a lot of weird, interesting things happening in the market here today, okay? First thing was take a moment to show you the most helpful stock market related service I found so far in 2022. It's called Tendies. Tendies allows you to see unusual options activity that's going on in the stock market. And with the pinned comment down there, you're going to get free access to everything I'm showing you right now. Okay. I sorted these by premium. Somebody's loading up on SoFi puts here today and Zoom puts here today at $12 strikes and $80 strikes there. If we go ahead and talk about Meta, right? I've been talking a lot about Meta. Where are people placing bets on Meta? Heavy on call options. Check out these moves.
Tendies is a social trading app that's giving away hundreds of dollars worth of tools for free, saving you hundreds per month if you look at what other services charge for the same stuff. I personally love the options flow, which is unbelievably helpful at predicting price movements in the options market. I also want to show you Brokerage Connect, where you can integrate your portfolio so you can monitor your performance and do the necessary research to be profitable in this environment. All the due diligence in one place, and you have access to constantly refreshing feed of information relevant to you in your portfolio. So make sure you click the pinned comment down there to get free access to all of this I showed you in this video here today. That will be pinned comment.
Pull up my big tech watch list. There were a lot of stocks that underperformed the indexes today. The indexes are all 2% plus, right? And then go ahead and look at some of these stocks. Intuit couldn't even, go above 2%. AMD, which has been absolutely devastated, couldn't make it. Palo Alto Networks, Google McDougal, Shopify, PayPal. Look at Amazon, Snowflake, and Uber all were down today. How are those stocks down on a day like today, right? That's pretty extraordinary there. And Uber, obviously, with the massive move, there's a lot of worries about Uber basically having to move from independent contractors to employees. Now, for anybody that wants to understand that on a deeper level, that doesn't quite understand that, it's very, very important, mainly actually from a tax perspective, because essentially it's about a 7.5% difference that Uber then has to basically compensate for. It's a big deal, okay? Plus, it just gets a lot more complicated and confusing when you hire an employee versus hiring an independent contractor. So it's a pretty significant, at least short-term situation there with Uber. And that's why even on a really good day like today, Uber can't catch a bid and still has that insane selling pressure. But you look at the upward moves, Netflix, nice move, Intel, nice move, NVIDIA, MU, you have Mr. Softy make almost a 4% move. Apple made a nice 3% move here today. Meta made a 2.1% move here today. Meta's in one of those situations indications that if they can just come in with decent earnings, that stock's ready to pop in a massive, massive way, to be quite honest. If they report a disaster, down you go some more there. But if they just come into a decent, they don't even have to report great numbers, decent, and that's a 10 to 20% mover on the next day, essentially, okay? Tesla caught a little bit here today, so that's somewhat encouraging. Now, a lot of times when you see a day like this, oh man, people like to misinform and try to say, oh, it's just stupid retail buying today or something like that. And it's like, dude, you think retail's moving Microsoft stock, a $2 trillion market cap, 4% today? Give me a break, okay? This has nothing to do with retail. This was 100%. What it likely was some short covering. It was likely some options activity out there. And also, I think algorithm related as well as far as this move. This had nothing to do with retail here today. If you think retail was out there, bidding up the market, absolutely not. Look at, I have a retail trader investor watch list, and almost all these stocks did horrible today, despite the market having a great day, right? Wish stock down 8% plus, Bed Bath & Beyond 2% plus, DraftKings 2% plus down, Teladoc, Space, Hood. These are all, definitely were heavy retail stocks, and those just can't catch a bid. Look at the ARK fund today. ARK, the main Cathie Wood ETF, was down today on this massive update. It couldn't even go up. It was down. HIMS was down here today. BlackBerry, break even, real. Palantir barely got a gain here today. SoFi barely got a gain here today. GameStop barely got a gain here today. Skills, Close. Those stocks all very underperformed, right? Only a few of the retail stocks actually did well today. And, most of them just were not good. So this was not retail out there bidding up this market, if anybody thinks that, okay? Just very misinformed there, okay? Now, in terms of the stocks I personally own, definitely has some big upward moves here today. Avant was up pretty nice, 11%. That's because in the past 24 hours they came out with earnings, and the earnings were absolutely phenomenal. If you didn't get a chance to check out my new channel, Jeremy Lefebvre Makes Money, check out the video I released today on that. That goes into in depth into Avant's earnings, and the earnings were absolutely tremendous. I just released that video an hour or two ago, and so I wouldn't be surprised if Avant actually has an incredible next kind of 6 to 12 months based upon their numbers, and I think that stock's going to attract a lot more attention based upon their numbers. It's pretty extraordinary. Speaking about Avant, Fubo, oh my gosh, Fubo, wait to see their numbers. Avant and Fubo are almost in a class of their own in terms of the growth rates they're going to be putting up. Avant just showed us that was ridiculous, like almost 70% revenue growth, insane. In this sort of market, to have that sort of growth is just almost unparalleled, and they're talking about getting to profitability very soon here, so that's extraordinary. Fubo is going to put up some just insane user growth metrics and revenue numbers, and in this sort of market, it's very hard to grow your business, and you're going to see that in earnings. It's going to be very hard for companies to grow revenue in a substantial way, but Avant, Fubo, it doesn't matter. It literally doesn't matter for them. They're going to put up ridiculous growth. Skyworks Solutions been way oversold. I even started buying Skyworks recently, which how much Skyworks has to be oversold for me to start buying that stock again. 5.5% move here today. JP Morgan, they're coming out with earnings in the morning. All the big financials are, right? Well, I don't say all of them, but most of them are coming out with earnings, right? I guarantee you there's some short covering there. And there's also folks kind of realizing, oh boy, if they just come in with decent numbers, the stock's poised to pop, right? Walgreens actually reported some very respectable numbers. That stock saw a 5% plus upward move, very undervalued there. Planet saw a nice move, 5%. BYND, Qualcomm saw a nice move. Those semiconductor stocks have just been kind of oversold. Honest had a nice move up here today. Chef had a nice move up here today. The shorts thought they were going to win, based upon an accounting thing that's, something from last year that was like a nothing situation. And they didn't win in that situation. And there's going to be a lot of losses for them next year. Corsair, 2.6% move here today. Pfizer, a decent move. Meta, like I said, if they just report decent, just come in with decent Meta and you're going up 10 to 20% on earnings. And good old Tesla also made a little nice move there, okay? A friend sent me this. You just witnessed the 5th largest intraday reversal in history for the SPY. You can now tell your grandkids you are part of history, okay? Obviously pretty epic move, and one that honestly almost no one saw coming, to be quite frank. And usually when you talk about one of the biggest intraday reversals ever, it usually happens when no one was expecting that, which is exactly going into this. Almost no one expected that. almost no one, right? And so if you're talking about that, that's when you get those epic moves. When you're talking about max bearishness, when you're talking about no one believes in the market, no one wants to own stocks, when you're talking about massive selling pressure for month after month after month after month, right? And everybody just goes in super bearish, that's when you start getting these massive reversals and people being like, wait, what just happened? Huh? What? Okay, and that's what you always see play out in these situations, right? Now, in terms of the Wall Streeters, right? These folks are in, I call this about like my bear land. Okay, so let's say we got a line, and it's like, what takes it to get the Wall Streeter here over to bull land, right? Well, first off, this is a process. It doesn't happen. This bear doesn't magically just jump over to the bull side. They've got to slowly be pulled over there. No different than if everybody's over on the bull side, the Wall Streeters, right? They don't magically just jump over to the bear side. They slowly get pulled over to that side, right? And right now, Wall Streeters in general are way over on the bear side. So we got to get them to 1, 2, 3, and 4, okay? So first thing is, if we're going to talk about getting the Wall Streeters from bear land to bull land, we need earnings to be okay. We need Apple's earnings, Microsoft's earnings, Meta's earnings, Amazon's earnings. We need those to not be a disaster. If they can come in with just decent numbers, okay, right around roughly what Wall Street's expecting, that's a situation where we can pull the Wall Streeter bears to stage 1 of kind of starting to come over to the bull side. If we get complete disasters, massive misses from the biggest companies in the world, and just across the board, and then even into mids and smalls, then that's a situation where these folks are staying over there. So we got to get earnings to be okay. We can get them over to right here, okay? How do we get them to, how do we get them to about halfway, which is around 2? Well, we need the conference calls to be okay. We need the commentary, any guidance companies give, which a lot of companies aren't giving guidance. We need it to be okay. It doesn't have to be great. It doesn't have to be like, oh man, we're going to tear it up next year. Our revenue is going to be up massively. No. Okay. We just need CEOs to say, we're cautiously optimistic. We're prepared if the macroeconomic landscape gets a little worse. But as of right now, our business is trending okay. There's going to be a lot of questions about how the company's doing so far in their current quarter because it's going to be such a forward-looking earnings period. So yeah, we need okay guidance. We need okay conference calls and not like the end of the world, okay? And if we can get that, then we can get the Wall Street bears to about midpoint at that point in time, right? Which by this point, they're going to have to start at least doing a little bit of buying, okay? Now, to get them to stage 3, we need a minimum of 2 weeks of a rally to get these folks to stage 3. And a day like today is very easy if you're all the way in the bearish camp, right? It's very easy for you to write off today as just a one-day move up and, we're still going down for the rest of the year. It's very easy to do that. What begins to get very difficult is when you have 2 weeks, 3 weeks straight of rallies. That's when the Wall Streeters start to go, okay, something switching's here. Maybe I'm missing something. Let me reassess the situation, okay? And that's a sophisticated way of putting it, but really Wall Streeters, what they do is they say, oh crap, I screwed up, I need to buy. It's as simple as that. And, I put it in a more sophisticated way, but, and that's the way they'll pitch it. But really they just realize, oh crap, I'm off sides in this situation, I'm underweight, I need to start buying. And it happens on the other side as well. If Wall Street funds are way overweight equities, and all of a sudden the market starts to switch to the bear side. At first, they don't recognize it. 2 to 3 weeks of that, and all of a sudden they start going, "Oh crap, I need to sell." Right? They're definitely sheep, and they follow each other around. And it always is pitched as like retail doesn't know what they're doing and is clueless. Wall Street's the most clueless of all them. They literally just follow each other around. If just bullish momentum's building, they all pile on. If bearish momentum's building, they all pile on. They follow each other around. And, that's just the way it is in terms of Wall Street, and that's what they do, right? So 2 straight weeks of rally, then you start getting more folks to pile on, and then you get a full-scale pile on into year-end when people start having to chase the indexes around. And this is something I've covered a lot recently on the channel, right? And by then, you got Wall Streeters in full bull land at that given moment, right? And then they'll reassess the situation going into 2023 and try to figure out, okay, where's the market going in 2023? And specifically the first half of 2023, is it going to get worse? Are we going to continue this bull run at that point in time, okay? So that's what it's going to take. If you're going to think about how do we get the Wall Streeters from bear land to bull land, it's going to take those four things basically going on right now. These three are the key. The pylon will magically happen once these three have taken care of themselves. Okay, so that's what it takes if you're going to talk about getting the Wall Streeters over to that bullish side and getting that epic, let's just call it November, December rally situation. Okay, now in terms of my personal approach to the market, and if you look at my actions, I'm doing rotation buys. So I'm buying like 10 to 15 stocks over the past month, 2 months or so, and just continue to buy those stocks as they went down. And my top 5 to 7 stocks are the ones I just buy heavier, essentially, and that's kind of the way I play it. Okay, so yeah, stay vigilant out there, guys. Stay observant on what's going on out there in the market. And it's a very intriguing market. It's a very interesting time. And this is going to be a crazy next few months in the market. That's all I can say about that. It's going to be, interesting. Let's just call it that, guys. Much love as always. I appreciate you joining me. Make sure you take advantage of that 10 days offer. You get free access to everything I was showing you in this video, plus a lot more if you use a pinned comment down there and set up an account with them. Once again, that will be free access, and nothing's better than free. So much love as always, and have a great day.